Hey everyone, we got some massive news out of Unity Software on January 8th, and in this video, I wanted to share with you what that news was, what I think of that news, and what that news could mean for Unity Software shareholders. So without further ado, let's jump right in, let's see what the news is, and let's do some analysis on those outcomes.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So on January 8th, Unity Software announced that it plans to reduce approximately 1,800 employee roles, or about 25% of its current workforce. 1,800 people are going to be out of the job. Now, Unity cannot reasonably estimate the costs and charges in connection with this reduction, but the charges will primarily relate to employee transition, severance payments, and employee benefits. So what I usually say about these kinds of layoffs, restructurings, or whatever you want to call it is I'm not a fan. I'm not a fan of these moves, especially from companies that I see doing it often. Like if you're doing this every couple of years, that's a really bad sign. That demonstrates that you cannot calibrate your employee needs, your team needs. Like you're overhiring, you're underhiring, you're as a management team, you're just not effective in determining your needs, and you're mismatching your needs with your actual performance. Also, it demonstrates that you're a management team that overinvested in growth. You got ahead of yourself. And that's one of the characteristics I try to avoid in the investments that I'm making. I look for management teams that invest in growth prudently, not aggressively. Now, there are rare circumstances where I prefer management teams invest aggressively in growth in opportunities that are so obvious and so blatantly positive return on investment that, yes, I want them to just go ahead and invest aggressively. But those opportunities are rare. They're rare. Business is difficult. Competition isn't going to serve up those kinds of opportunities to you very frequently. So, in most cases, I'd prefer management move forward prudently rather than aggressively, because most often it's going to come back in higher costs, in more unnecessary costs, like in this case here. And you might say, well, how do you suppose management should go about when they have too many employees? And it's important to remember the current economic environment. We're not in a recession. That makes this even worse, right? If we were in an economic downturn where the whole economy was moving down, where there's job losses everywhere and consumer spending is falling, and you want to make sure that you protect your business to survive this downturn, in those cases, I'm usually in favor of cost cutting, dramatic cost cutting like this. But we're not in that kind of economic environment. In fact, we've just come off of 2 years of massively above trend employment growth, and job gains continue, and fears of a recession have actually diminished. The Federal Reserve is talking about decreasing interest rates in 2024. GDP was positive, significantly positive in 2023. It's expected to come in around 1.5% for 2024, positive again. So in that backdrop, it makes this even worse. It makes it solely the outcome of overinvestment, overhiring, and not the outcome of a big slowdown in the broader economy. So in these cases, when you have the broader economy growing and your specific company may not be experiencing the growth you planned for, I'd prefer management teams reduce their employee count through attrition. Attrition. Every day, every week, every month, there are going to be employees in your company. When you have as many, in the thousands of employees, when you have that many, there are going to be employees that quit. they're just going to quit. They're going to say, you know what, this role or this company is not the right place for me. I'm leaving. Here's my 2-week notice. You're going to have employees that retire. You're going to have employees that get poached by your competitors and they leave. And so you're going to be losing employees on a weekly basis. And if you really want to shrink your employee count, that's how you shrink. You reduce your hiring, you stop hiring, and you let the people that are no longer enthusiastic about being with your company, you let those people leave. And that creates an even stronger company, in my opinion, because you keep all of the people that want to be there. You're not firing people that want to be there, and you're letting go of the people that don't want to be there. And so over time, your company is getting stronger because you're keeping more of the people that really want to be there. You're losing the people that don't want to be there, and your culture and your organization becomes stronger as a result of that. But when you do this kind of layoff, when you just say, okay, 1 out of every 4 people we're going to fire, how do you decide who is 1 out of those 4? Who are the 3 that you're going to keep? That's going to take time. That's going to take analysis. That's going to take energy. That's going to cost money. And you might be letting go of many, many people that want to be at your company. And you might accidentally keep people that don't really want to be there, that might be on the way out. They just haven't found the right role yet to leave your company. And so for all of these reasons, I typically dislike these kinds of moves, and it makes the company, I kind of put the company in the penalty box in my analysis, and I watch out, I wait for the outcome of these decisions before I can feel comfortable again in considering the company as an investment. Now, like I mentioned, this isn't the case all of the time. I don't make that decision all of the time. There's situations like last year when Meta Platforms, Alphabet, and Amazon made these decisions. I was generally, although not always, a fan of those decisions because I felt that Meta and Alphabet especially had overhired and they had too many employees, too many roles, and I felt like they could use a trimming down, a meaningful trimming down. But I'm not certain that Unity needed to do that, especially 25% is a big cut. It's a big trim down. So that remains to be seen how the outcome of this is. I'll be following Unity as I have been for several years now. I'll be following closely and see how these cuts manifest, see how they impact the company's cash flow from operations, see how they impact the company's profitability. You'll notice over the last few years, their cash flow has been choppy, up and down, no real consistent upturn. And so I'd like to see how that goes. Their revenue growth has been solid, growing revenue from around 800 million to 2 billion. And estimates suggest that they're going to continue growing. Estimates suggest 11% growth in 2024 and 13.9% growth in 2025. So like I mentioned, the company's going to continue growing. The economy is growing. So it's not as if it's in some situation where its business is experiencing significant slowdown. That's what makes this really questionable and really a situation of management just overhired for these roles, and now they're needing to make this drastic decision. So there you have it. That's the big news. That's what I think it means for shareholders. And as always, I will be following Unity Software, Unity Technologies, and I'll be providing updates throughout 2024. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.